Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 14th of October, 2020, and we're providing a midweek financial update. Having seen both gold and silver dip since Monday, but stage a slight recovery this evening. Now, before we take a look at what's been happening today and the last few days, just a brief reminder that on Monday we published a video entitled Negative Rates for the UK Next, Implications, and on Sunday the second episode of Are We Reaching Peak Gold? And we've placed links to both of these in the description box below. Now, last week we saw gold close at $1,930, which was its week's high. And frankly, we thought it would at least make an attempt to at least continue in that direction on opening on Monday, especially as Monday was a holiday in the US, and therefore trading would be light and therefore tight. Well, apart from a very tiny blip upwards on opening, gold did in fact fall back, reaching a low earlier today of $1,882, but having recovered since then to its current level of $1,901. Silver, having closed last Friday at $25.17, did follow through on Monday morning, briefly touching $25.58, and then, like gold, fell back to as low as $23.91 earlier today and is currently resting at $24.26. Now, both of these metals are still within our target range of gold $1,850 to $2,000 and silver $23 to $26, so we're not concerned. But it would have been a little more exciting and satisfying to have seen gold actually rise on Monday morning, a good $20 to $30, and silver to jump $1 or so. Now, just a slight reminder as I'm speaking with a very sore throat this evening. It's not coronavirus, just perhaps too many cold drinks today. But anyway, US equities are down between 0.5% and 1%, with the Dow at this precise moment, though perhaps by the time we finish this it will have changed, at 28,514, the S&P 500 at 3,488, and the Nasdaq at 11,768. And European equities closed down broadly around 0.5%. The US markets still have a couple hours of trading left in it. The dollar index is down today at 93.41, but this is still up on Friday's close of 93.05. Now, we mentioned a few moments ago that gold staged a slight rebound, partly because of the US dollar dipping, with the 10-year US bond yields falling 3 basis points to 72 basis points. The Consumer Price Index announced yesterday for September came in at 0.2%, compared with 0.4% in August, and core CPI, 0.2% versus 0.4%. And today's Producer Price Index announced showed an uptick to 0.4% for September compared with 0.3% in August. So now, since the start of this podcast to now, an hour has passed, let's take a quick look at the closing Reuters report. Reuters article dated October 14th, 2020. World stocks sag on pandemic surge. Gold gains on safety bid. Global stock markets mostly retreated on Wednesday as a record number of new coronavirus infections in parts of Europe led investors to shift away from risky assets to traditional safe havens such as gold and the Japanese yen. Concerns that the resurgence in the COVID-19 pandemic could lead governments to again shut down economies spurred profit-taking, particularly after the recent stock rally. Pandemic uncertainties were compounded by news on Tuesday of halts to separate trials for a COVID-19 vaccine and a treatment, tempering a brief stock boost from US investment bank Goldman Sachs Group strong earnings report. Remarks by US Treasury Secretary Steven Mnuchin that a deal for more fiscal stimulus would not likely be reached before the November 3rd elections also capped gains in shares. Major US stocks indices gave up early gains, and the S&P 500 closed down 23 points, or 0.7% at 3488. The Dow Jones Industrial Average dropped 166 points, or 0.6% to 28514, while the Nasdaq Composite Index shed 95 points, or 0.8% at 11,768. The fear we are headed back towards a lockdown, not a reopening of economies, said Tim Grisky, Chief Investment Strategist at Inverness Council in New York. France declared a public health state of emergency on Wednesday, while Italy, Russia and Poland all reported their highest ever daily tallies of new infections. With COVID-19 cases surging, some European nations are closing schools, cancelling surgeries and enlisting student medics as overwhelmed authorities braced for a repeat of the nightmare scenario seen earlier this year. The Pan-European Stock 600 ended barely changed at 370, while markets in Frankfurt and Paris were flat and down 0.1% respectively. London, buffeted in part by Brexit angst, dropped 0.6%. World stocks slipped 0.3%, but stayed within sight of the all-time high struck on September the 3rd. Asian stocks were also lackluster. MSCI's broadest index of Asia-Pacific shares outside of Japan ended a 7-day rally and slipped 0.11%, a day after hitting a 2.5% year high of 588.76. Chinese shares closed down 0.7%. The price of gold climbed more than 1% before narrowing gains to $1,903.15 an ounce. Government bonds also benefited from investor caution. German bond yields, which move inversely to prices, hit their lowest since May. The 10-year US Treasury yield dipped to 0.7256%, and the yield curve, the gap between 2 and 10-year yields, flattened a touch on news that more US fiscal stimulus was unlikely before the November 3rd election. The US dollar softened after pulling its best day in 3 weeks on Tuesday. The dollar index, which measures the greenback against a basket of 6 major currencies, fell 0.2% to 93.38. In a sign that some investors preferred traditionally safer assets for now, the yen gained 0.4% to hit a near 2-week high of 105.11 against the dollar. The euro was little changed at $1.1753 after hitting a 9-day low of $1.1718, while sterling held above $1.30, helped by news of some progress in British-European Union trade talks this week. By early evening, the pound was up 0.7% at $1.3031. A weaker dollar, which makes oil cheaper for holders of other currencies, supported oil prices. Brent crude gained 92 cents, or 2.2%, to $43.37 a barrel, while US West Texas Intermediate added 87 cents, that's 87 cents, or 2.2%, to $41.07 a barrel. So, as we can see from the Reuters report, that a lack of a potential stimulus package may act as a dampener on precious metal prices, while the lack of a vaccine may actually help precious metal prices as fear of further lockdowns continue. Of course, if the economy falls considerably flat, then there might be an even further boost for gold particularly, and silver secondarily for monetary purposes. So we've got some interesting 2 or 3 weeks ahead prior to the election, but there is some now growing concern that the virus, and certainly the infection rate, if not necessarily the death rate as yet, but the infection rate is actually getting out of control. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening, and if you haven't already done so, please subscribe to the channel. Not forgetting to press the bell sign so that you're notified of our videos as and when they are published. And controversially, Greg has asked me to put a plug in for the Richard and Greg channel. And again, we put a link in the description box below, where Greg and I, 2 days ago, spoke about Russia. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.